Welcome back to the podcast. Jordan, welcome back to the podcast.
Thank you, Zara, for welcoming me back to the podcast.
I did forget to introduce you in the last episode.
Yeah, thanks.
So I apologise for that.
That's okay.
But everyone knew you were there.
Maybe they did, but maybe 15 minutes in. Maybe 10 minutes.
Yeah, that's okay. We got there.
Yeah, I just appeared. Like, oh, he's on this one too.
Anyway, it was a good episode.
Yeah, I thought it was really good.
It's a good conversation.
Bit of a deep dive into outsourcing, specifically in the Philippines, which is cool.
Yep, definitely. And Richard, who is the founder and the CEO of the company that we were talking about in the episode, touched on some really interesting points too about like customers and consumers that are coming on board and trends and those kinds of things. So really good episode. But today we are doing a rapid fire question on finance tips for small businesses and what they need to know.
Let's do it.
I'm just going to go ask you questions.
You do you. Ask away.
So essentially, obviously, there is a lot of importance in understanding and having that kind of financial literacy as you are building and growing a business and stepping into the business space in terms of the growth of that business, understanding kind of who you're talking to, what you're talking about, but also being able to have really solid, like intelligent conversations with your accountant. And so you know where your business is going. So what's your top tip? We're going to go through 10, but what's number one?
I would say probably cash flow is most important. Just making sure that you've always got money in the bank. If there's no money in the bank, you're not going to be able to grow. You're not going to be able to scale. It's really important at the start, especially if you have none, you need to slowly be able to build up some type of cash buffer, whether it's you start off with sometimes zero, but ideally you'd want to have 3 months buffer to float the business, so that way you can scale. And if you have a few months sitting there, then you're not going to have any issues if you have a quiet month or two. So that can help alleviate stress, especially having a decent cash flow buffer.
Yeah. And is there any tools that people can use for this sort of thing?
Yeah, Xero, which we'll dive into. I think the most important tool to have is probably Xero. Automate your invoice reminders. A lot of the times we'll do a job, or any service-based business will go out, do a job, and then they'll invoice. If they do the job on Tuesday, they invoice on Friday. They're not going to get paid for 2-3 weeks. So you've already incurred a cost of labor, material, whatever it may be, and you're not going to get paid for 2 or 3 weeks down the track. So I think it's super important to have a system like Xero where you can get your invoices out same day. There are industry-specific softwares as well. That you can use, and that can really help with the process. But the good thing about Xero is it automates a lot of the follow-ups. So if I send you an invoice and you don't pay me on time, an automated email can go out every 7, 14, and 21 days to prompt payment. So yeah, I would say Xero is probably the most important. And if there's an industry-based software, then even better.
It's interesting you spoke about, obviously sometimes there's a delay in that invoice going out, and then obviously there's those debtor days, which we've spoken about before, and you've spoken about that in particular, and how important they are and how you can kind of, shorten them. But maybe we could dive into debtor days a little bit.
Yep. What do you want to know about them?
Well, just if people haven't listened to any of those episodes, like what are debtor days? How can they impact your business?
So generally it's your trading terms. So the most common is 14 days, but if you're in the construction game and you're working for a tier 1 builder, then you're getting 30 days end of month. So you'll incur costs for a month and then you won't get paid for a month. So you're almost 2 months behind schedule from a cash point of view. So it's super important to stay on top of them and just reduce the debtor days. It's the most important thing. And how do you do that? Automated reminders is important. Having different types of payment. So some people don't take credit card. That can be an issue too, where some people would just have bank transfer.
Is that common to have, like how often would you see businesses, obviously you work with a lot of businesses, how common is it that a business wouldn't offer credit card as a payment term?
I think it's a lot more common than it was. I'd say more than 50% now, but there are still some that won't accept credit card because of the fees, even though you can on-charge the fees. So it just depends. It depends on industry and depends what you do.
Yep. Interesting.
I think the most important thing for debtor days is just billing as soon as the job's done. Don't leave it for 2 or 3 days because it could prompt a shit conversation with a customer. Because sometimes, like I've been there, I'm like, I don't want to send this bill. But just do it. Send it out. If you have to have a hard conversation, have a hard conversation. Make sure all of your payment gateways are set up, whether it's Stripe, Go Cardless, or whoever you use. If it's an FPOS machine, get all that set up. set up your automated reminders, and then have some type of debt collection process, whether it's once all the emails go out, then it's a phone call and you can follow a script to make that crap conversation easier. That helps a lot. So I'd strongly suggest having some type of debt collection process in place, because if there's no cash flow, then there's no business essentially.
Yeah, absolutely. And I guess moving into like your next point, obviously cash flow, finances, and making sure that you have those clear kind of boundaries in place in terms of, you know, I know a lot of sole traders who the money that comes into the business just goes into their bank account. That's their salary. Yep,
it's true. It happens all the time. But a lot of people do that when they have companies too, which is a whole nother issue in itself. So whether you're a sole trader, a company, a trust, a partnership, whatever you are, it's so important to have your personal spending and your business spending separate.
Yeah.
So a lot of the times with a company or a trust, a business owner will just go and spend all their personal, or put all their personal things on the credit card or on the debit card. And that can cause, it does cause tax issues through director loans and Division 7A. I won't dive into that because it's boring as, but it can be.
What? Really?
Yeah, believe it or not. It's important that you don't do that and you have clear lines of separation between your personal stuff and your business finances too. And the best way to do that is to just have separate bank accounts. Have your personal stuff, pay yourself an amount every week, whether you're a sole trader, regardless of whatever business structure you're operating through. Transfer yourself out of your business account, whatever you need every week, and then go crazy. You spend it on whatever you want.
So as an example of that, you would have like, you know, account A, and that's all of your clients pay account A.
Yep.
And that's the business account.
Yeah,
and then in account B, it's like that's your, you know, you're going to the movies, you're going out for lunch or whatever, and that's your salary goes from account A to account B.
Yeah, correct. Again, regardless of what business structure you are, if you're running a business, I'd suggest at a minimum having 2 bank accounts. The first one being account A that you mentioned. So you receive all the payments into it, you pay all of your bills out of, and then have a separate bank account as like a savings account, a business saver or whatever they're called. And in that account, you would transfer all of the tax on wages, superannuation and GST into. So that way you're not spending money that's not yours, because that money will go towards your BAS payment.
Yep, that makes a lot of sense. I guess a thumbs up to the camera. I guess the other thing is obviously some of the things that you've spoken about might seem quite common knowledge, but obviously it's something that is for you as an accountant. But I guess getting an accountant really early on in the piece is really important.
Yeah, for sure. Especially with the structuring side of things. It's important that you're set up properly from the start, whether it's a company or a trust. Generally, you outgrow the benefits of being a sole trader very quickly. Getting a good accountant is important, but I think you need to have expectations too. So when you go to an accountant, traditionally, it's to do your tax work. But a lot of people want the advisory side of things where they can use us as a sounding board to help them with their business, which has got nothing to do with compliance. It's more of it's a monthly check-in where we have a high-level meeting around the business and cash flow and what that looks like. They're very separate things. Yeah, it's just important to set expectations from the start. There's tax compliance side of things when dealing with your accountant, and every accountant can do that. And look, same as the advisory stuff, but at the end of the day, like that's an added service that people need to be prepared to pay for as well.
Yeah. Yeah, absolutely. I think there's something in there that you mentioned that would be an interesting thing to touch on at a extremely high level, but you said quite often people outgrow a sole trader quite quickly.
Yep.
And then it might make sense to do a company and those kinds of things. But what are some of those signs that you would see someone is outgrowing being in a sole trader position?
Very high level.
Yes, very high level.
There's tax rates and whatnot, but I think the most important thing is like if you're in it for the long haul, then you're better off, in my opinion, you're better off setting up as a company or whatever corporate structure from the get-go, because again, you can accumulate losses. There's limited liability in a company, a capped tax rate. If you're accumulating losses, you can utilize those losses moving forward. And it's not to say that you can't do that in a sole trader. You can. There's non-commercial losses rules that we don't need to dive into. But you can still utilize losses as a sole trader. It just depends. There's a few tests that need to be met in order to do that. Yeah. But yeah, I would say if you're in it for the long haul, if you're trading, you've got some activity, there's money coming in, I would say you're pretty much.
Would you say at a very baseline level, there's like a revenue threshold? Or not really?
Yeah, if you're doing over 100 grand in turnover, and that's probably where you'd start to look at it. Yeah. But again, it's very high level. There's no set way of doing it.
Yes, of course. I just thought it was an interesting point as you kind of touched on it. So obviously we've kind of touched on debtor days. You just mentioned turnover, but what are some of those other kind of key metrics, I guess, that business owners should be looking at?
Yeah. There's a few very high level, like your turnover, how much money are you invoicing out every month? How long does it take you to collect it? So your debtor days, if I send you an invoice today, what's the average days it takes me to get that invoice paid? Depending on industry, your gross profit margin. So what's your percentage of profit after your direct costs? And then net profit's really important too. So what are you left with after everything's paid besides tax? Like your profit, that's got nothing to do with your profit. So I think they're the most important things. And look, there are metrics for very specific areas of the business too. So as an example, like from a marketing perspective, it could be your customer acquisition cost. Like how much does it cost you to get a customer? It could be your LTV. So that's another metric that you could look at. There are metrics for certain industries as well. So maybe just have a bit of a Google and see what best applies to your specific industry.
Yeah. It's interesting because obviously there's Daniel's cash flow spreadsheet, which we've referred to a few times. Some of those metrics you could drop into that spreadsheet, right?
Yeah, you could. Net profit for sure, gross profit for sure. You just have to insert formulas to give you percentages.
And that like customer acquisition cost?
That you'd have to build that out separately.
Yeah, okay.
If you want to get a bit more granular.
Yeah.
Oh no, you know what? No, you would have to build that out separately.
Okay.
But you'd want to anyway with that, so you can go granular on the marketing spend and what you're getting from it.
Mm-hmm. Cool. Okay. And then I guess it's also thinking about like you've mentioned turnover, net profit, those kinds of things, like breaking even.
Yeah. So how much does it cost you every month to keep the doors open? And the easiest way to do that, if you're on Xero or any type of online accounting software, look at your P&L and just see what those operating costs are. Plus, from break even, you're going to have direct costs too. So you can take those into account. So how much money do you need to keep the doors open every month, essentially? That's what you want to do, and that's what you want to find. And to find that, you'd be looking at the P&L.
Yep, absolutely. And then next thing we've got listed down here is your pricing strategy.
Well, when thinking about pricing, there's a few different ways to do it. I think the most common one is cost plus. So you have whatever it costs you to create the product or produce the service plus a small margin. That's probably the most common one. There's value-based pricing too, where you set prices based off perceived value for the product or service. Yeah, I think they're the two most common ones. And another common one actually for like the SaaS type businesses is that freemium pricing, like Spotify when it first came out.
Yes.
So they offer you a basic version for nothing.
Yep.
And then you get upsold into their premium or...
Yeah. Originally it was like you had ads in the free one, and if you didn't want ads, then you upsold. Yeah. Which I don't think it's like that anymore. They've got other things.
Yeah, but that's a lot of software companies do that to try and get you in, and then like very surface level.
It's kind of the app model, isn't it?
Yeah, exactly. That's what I was looking for.
Yeah, and then obviously accounting tools, obviously to keep track of all of this sort of stuff. You mentioned Xero, but what else is out there?
There's Xero, MYOB, QuickBooks. For us, we use Xero. Well, I'd say 99% of our clients are on Xero.
Yep.
And how does Xero save you time? So there's a few ways. There's quite a few ways where it does save you time. So from invoicing, we spoke about the automated debtor reminders, payroll, filing single touch payroll with the tax office. You can do all of that through the platform. There's also automatic superannuation payments as well. Yeah, so that's probably Xero. And look, they all do what I've just mentioned, I'm sure. But again, Xero is our favorite. Another thing you can utilize is HubDoc or Dex, which is they can help you automate the accounts payable side of things as well. So if you owe suppliers invoices, you can just take a photo on this app and then it automatically syncs with Xero. So that's another way you can save a bit of time.
One of the companies I used to work at, we had the leaders or the managers of different teams. We had a company card, but it was a digital card. And every time we paid for something, it kind of popped up with all of these details that we had to put in terms of, you took a photo of the receipt and it had this, obviously what it was, what the purpose was. You selected it from all the, these different categories. How can those be helpful? Obviously, you have to have a team of people and you have to have multiple people using a business card for that to be worthwhile.
Yeah, it's the exact. So that's the expense management side of things.
Yep.
And you can just like you said, if you've got 20, like if it's just 1 or 2 staff, it's not a big deal.
Yeah.
And sometimes it could be even 50 staff, but if they're not required to have a card, then it doesn't matter. But if your staff do need to expense things all the time, it just helps you identify who's spending what are the payment limits. It helps at scale. Like anything above 10, it's very hard to track.
Yes, I can imagine.
Yeah, it's important if you do have staff that are spending money all the time, which would suck.
Yeah. And then obviously kind of going back into those debtor days, having those policies in place, I can imagine is so important. Yeah,
for sure. And it's when we say policies and like what's your debt collection policy, it can really be as simple as clear payment terms, automated reminders, and then a script for those conversations that you need to have. And like, that's it. And if someone's owed you money for 60 days, 70 days, and like they're not going to be a customer again, send it to a debt collection agency. If they have no intent to pay, you can sell the debt at 80% or 70% of what it's worth, and then it's on them to collect it. So that's also something to keep in mind.
So talk to me a little bit about, because I've heard business owners have spoken, there was someone that we were working with that was in the construction industry, was waiting 3 months on this payment to come.
It's pretty standard in that industry, which is
really poor. But yeah, they were talking about potentially sending it to a debt collector. What does that process look like if you were in a position where you hadn't been paid for 3, 4, 5 months, something like that? Another client actually, just as I'm speaking, in the recruitment industry, they were waiting on a payment for 3 months, which is really bizarre. But what is that process? If you were in that position and you were like, all right, that's it, I'm going to go to a debt collector. Does the debt collector take a clip of the ticket? What are the steps that they take?
Yeah, there's a few different ways to do it.
Yep.
But yeah, they can clip the ticket, you can sell the debt, and they can pay you up front. It just depends. There's a few different ways that it can be done, but they're essentially the 2 models.
How often in like with all of the clients you work with in your industry, would you see that a debt collector actually being called upon?
Oh, it happens all the time. Yep. But I think if you send a legal letter, that's like
enough.
It's got more than receiving a recoveries letter, to be honest. I mean, we always suggest to send a legal letter because you can sue them for it. If your T's and C's have been breached, and that's why it's really important to have everything set up properly, whether it's engagement letters or terms and conditions of service, whatever it may be. You just want to make sure that it's all set up properly.
Yep. And is there software out there or professionals out there that can help you set up those terms of service?
Yeah, a solicitor.
Yep.
We use a solicitor for our personal stuff.
Yep, absolutely. And so it's something that, non-negotiable regardless of size.
Yeah, I agree. Non-negotiable just to protect you from that.
Yep. And it doesn't matter how big you are. There was someone that a friend that I was working with just a friend. And we were talking about it and they were waiting. They had people that were booking in a service and then cancelling the service, and they didn't really have a cancellation policy or a payment policy in place. Okay. And so the service was being booked in and then it was being cancelled within like 48 hours for people being like, I can't make it, or I've run out of cash this week, or whatever it might be. But then my friend had that service slot booked out. So then lost revenue. Yeah, because they then couldn't change that or bring somebody else in because it's too late notice. And so then they started implementing, a 50% up front and a 50% at the end of the service. And the cancellation rate just, I don't think there's been one since.
It just shows you the importance of having those processes set up.
Yeah, absolutely. And so I guess going back to, if you're in that situation, you are waiting on funds to come in from a client you've worked with, or you're waiting for an invoice to be paid, I guess going back to that emergency fund.
Yes.
Is so important.
Yeah. At a minimum, look, we always say like at a minimum 3 months, but in practice it's very uncommon. It just depends on your risk appetite, to be honest. Everyone's different. the best way to do it is to slowly build to it, because at the start you obviously can't have 3 months. Well, sometimes you can, I guess, but it's not ideal to have 3 months of operating costs. So you just have to slowly build that buffer.
Yes. Yeah, that makes a lot of sense. And then is there anything else, top tip number 10 that you would recommend?
Top number 10.
Top 10?
You're just staying up to date with all of the tax deductions that apply to you, depending on what business you're in, is super important. Make sure you're doing all of your BASs on time. You're putting money aside for them. You're lodging your tax returns on time. And tax planning. It's something that you want to reach out to your accountant and do in May or early June. So that way, if you need to, first thing that comes to mind is make additional super contributions, you can do that. But just on that as well, don't just spend $1 to save 25 cents or
yes,
maybe 35 cents if you take into account the GST side of things too, but you're still spending the money. So that's something to consider as well. A lot of people will call us and go, oh, I need to reduce my BAS, I'll go buy a car. Well, you're still going to incur the cost of that car and you're going to pay 8% in interest as well. So do you need the car? Like, there's no point just doing it to bring your tax down. And even now the immediate asset write-off is obsolete. So just, don't do things for the sake of doing them.
Yeah.
If you don't need them, don't buy them.
Makes a lot of sense. I think we've obviously gone over a few, and the title of this episode is top 10 tax tips or top 10 finance tips for Aussie businesses. Can we go through them?
Yeah.
1 to 10? For
sure. So the first one that we spoke about is cash flow, just highlighting why it's important and the importance of being able to know what your cash flow is. The second being having a clear differentiation between your personal and your business finances. What we meant by that is have a personal bank account and have your business bank account. Keep them separate and no cross-pollination. Number 3, get a great accountant early. It's important to get an accountant early. Make sure all of your lodgements are on time, your BASs, your tax returns. And if you want some value-added services, reach out to them and ask them about the advisory work, but be prepared to pay a bit extra because it's, again, a different service offering. Number 4, keep an eye on your key metrics. We spoke about profit margin, debtor days. We briefly spoke about customer acquisition costs as well. Number 5, understand your break-even point. Super simple. Look at your Xero file or MYOB file and work out what your expenses are for a certain period. Look at the month-by-month basis. Maybe look at your last 3 months and take an average. Number 6, optimize your pricing strategy. We spoke about some different types of pricing, the main 2 being cost plus and value-based pricing. Number 7, utilizing cloud-based accounting tools. We spoke about Xero, MYOB, QuickBooks, and some other software called Dext and HubDoc. Number 8, we spoke about having a clear debtor policy. So automate your reminders, have your clear payment terms, make sure you collect all different types of payment, and even having a script for when it does come down to making that phone call that none of us like having. Some people do. Good on you. I don't. Number 9, build an emergency fund, having 3 months put aside of your operating costs. So you can slowly build to this and it doesn't need to be a lump sum all at once. And then stay tax savvy. So just make sure you're up to date with all the deductions that apply to your business and to do some tax planning in March or early June.
Yeah, great. Thank you, Jordan. And if anyone is listening that has finance related questions, you can, in the show notes, there is a link where you can submit questions. And we can answer them on future episodes. It is obviously finance, tax, accounting, all of these things are so common, particularly through the inflection community. We always get lots of questions about it. So
for sure.
If you do have questions about it for Jordan, then drop them into the question box.
And if you wanted to ask specific questions as well, you'll be able to book a meeting with myself or Dan. It's always one of us that those meeting links go to, and we can discuss your specific scenarios too if you want to have a bit more of a deep dive.
Fantastic.
So, looking forward to it.
Thanks, Jordan.
Thank you.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.